Okay, today we're going to try to answer some questions that were asked on my YouTube channel. So as usual, this is just entertainment. This is not financial advice. And so let's see if I can answer some of these questions. Pablo Hornby asks, with regard to dollar cost averaging I have discovered Nerve Finance on the Binance Smart Chain. They offer 3 stable coin pool and 4 pool, one with 24 and 25 APR. That is an insane interest to earn once you have made a killing this cycle. One problem is they both contain USDT in their pools. Do you think USDT or Tether will collapse or not? What would happen to liquidity pools with USDT in such a scenario? Well, honestly, I don't know, but I do have concerns with Tether because they're not really audited. I think if they had issues, I've read that Bitcoin might drop just like 5%, but you just never know. My plan is basically to get out, hopefully at the end of the cycle before the bear market starts, and have like at least 2 years of living expenses that you need. And I'm going to just wait it out. I don't really believe in the yield farming. I know you can make money with like BlockFi and Celsius. DeFi is still kind of new, and I don't think it's had a lot of experience with a bear market. So if some people have coins that they're borrowing against or something, and the market goes down, you're going to be asked to add more or get liquidated. And I also believe, if it's not your private keys, it's not your coins. And I don't know how these companies with the new DeFi, how they're going to handle a big bear market that might last 1 or 2 years. So, I'm staying away from borrowing when I think it's at the top of a market. Now, it's a different story if it's at the bottom of a market. Let's say a year goes by and we're down 84% for Bitcoin. And I think the market might turn around after a year or a year and a half or whatever. Then I would feel more comfortable borrowing against my assets, because at least hopefully my assets would go up from there. So totally different. I think it's a lot less riskier to borrow against your assets at the bottom of a market. So I am worried about those. You put your crypto in somebody else's hands and you give up the private keys. So, it's if Bitcoin gives you like a 200% annual return on average, and you're earning, usually 5 to 8% maybe a year, it's for me, it's not worth it. Right. I would rather just wait it out a year or two and then maybe do something like that at the bottom of a bear market. There's 24 to 25 APR. That sounds really odd to me and fishy, but I don't know how they get that. I mean, the last time I saw interest rates like that was when like the Fed used to have like huge interest rates on your savings accounts. I think it was like in the 80s, and now that's all gone. But I think they were trying to control inflation. So way down here we got a big question from same person. Yeah, Pablo. Pablo, man, you're killing me. Excellent stuff. The CVI index against dollar stock averaging. I think what percentage of the index would you choose to get out? Okay, so everybody's different. So if you have a low risk tolerance, you might want to start looking at like dollar cost averaging out when it's like 80, right, on Collins index. I have a high risk tolerance. I probably will start analyzing every chart on earth when it starts hitting like 90. And it's just one of those guides. If it hits 100, alarm bell should be going off to get out. However, that's what just the charts tell you. The charts don't know macroeconomics. In other words, the charts don't know if an ETF for Bitcoin is going to pass. And the charts don't know if that's going to allow people like in their 401ks to start investing in Bitcoin through their mutual funds or through an ETF. So, I mean, if that's down the line, then I probably wouldn't even. I would cash out less Bitcoin because it's just going to go up. Everybody's going to be scrambling, not scrambling, but if everybody starts dollar cost averaging into Bitcoin with their 401ks, like they do with like index funds right now for the stock market, it's just going to go up in a straight line, like at a 45-degree angle. So the people that are buying Bitcoin now are going to reap the benefits because everybody in the 401k probably still won't be able to afford just even one Bitcoin, because as their dollar cost averaging, the prices are just going to go up higher and higher and higher and higher, and they're never going to obtain that one Bitcoin. But people now that have Bitcoin, I mean, they're just going to get rich off of the people funneling money into Bitcoin if an ETF gets passed. I mean, that's why these banks like JP Morgan, I mean, they lied about Bitcoin at first, saying, oh, we're going to fire anybody that chooses Bitcoin and whatnot, and they were basically secretly buying it behind everybody's back because they know what you got to get in early before everybody else does, and then everybody get rich on everybody else. It's just that's how it's going to be. So that's my little rant on that. So yeah, if it's hitting 80, you can if you got a low risk tolerance, you can start dollar cost averaging out. I'm going to be looking at charts at 90. Probably start dollar cost averaging out. Definitely starting at 95. And I think you were asking about how many times, and each time, everybody is different. I would also look at your goals. I mean, did you already reach your goals early? If you reached your goals, you don't have to go for more money. Just be happy with it. So what percentage should I leave in altcoins? Well, let me go back a little bit. Me personally, I probably will dollar cost average over like a week or two if I really get nervous and those numbers will start getting high. If it's like 95 to 98, and then you're going to see probably a 40 to 70% drop over 1 or 2 days. I mean, things are going to get really crazy at the top of a peak. For example, I'm looking at a chart, and at the end of 2017, Bitcoin went up $1,000 in 9 days, and then it went up $1,000 in 2 days, and then it went up $1,000 in a day, 6 days, and then it went up $1,000 in 17 hours, and then 4 hours, and then it went up from $14,000 to $15,000 in 10 hours, and then $15,000 to $16,000 in 5 hours, and then from $16,000 to $17,000 in 2 hours, and then it went from $17,000 to $18,000 in 10 minutes, and then it went from $18,000 to $19,000 in just 3 minutes. So, when I start seeing crazy jumps like that in the news cycle, like we might have increases of $10,000 in a day, and then it might be in a few hours, and then it might be 2 hours, and then it might be 10 minutes, and then it might be 3 minutes. I mean, if you see giant jumps of like several grand in just a few minutes, and the Collins index is high, I mean that's a clear sign. Things are probably going to come down. It's just when things go parabolic, we all know it's going to have a correction. Should be no surprise now. What percentage should we have in altcoins? It's again risk tolerance. I know that usually, I think the Bitcoin top is in before the altcoin top, if I remember correctly. We had a big drop in Bitcoin. I think it was like 40 or 50%, but then following that drop at the top, the altcoins rallied for like another 40%. So you kind of have a second chance to get out of altcoins, I think, because people kind of shift in and out between altcoins and Bitcoin. So, risk tolerance, I prefer like 80% Bitcoin, 20% altcoins. I could just handle the risk better that way. I mean, if you really high risk tolerance and you're in it for the long term, good quality alts could probably outperform Bitcoin, but it's riskier. And you don't really need that risk. Bitcoin goes up a lot as it is. I mean, if you're in this crypto market with Bitcoin for 4 years or more, you're going to make significant gains. And if you're young, I mean, you probably work half as much as your father did or your mom did. What percentage should we leave in altcoins through the bear market? Oh, through the bear market, zero, absolutely zero. Same with Bitcoin. I mean, Bitcoin went down 84%. Altcoins went down 96%. I mean, I'm just going to be out. And I've heard other people on YouTube that, like me, stuck through it, and it's like we're not going to do it again. If I cash out and somehow the market kind of keeps making new highs, I might dollar cost average in a little bit, but by then I should have life changing wealth. I'm hope. Or should we dollar cost everything out entirely, then sit on USD and yield farms? Okay, so yeah, I'm not gonna put a lot of my money back in my bank when I cash out. It'll probably be like a combination of DAI and USDC. And those are the two that I'm comfortable with. This yield farming thing, not your keys, not your coins. You say you have 41 million tokens, average cost of about $65, a rough guess. Just dollar cost average out. If you don't already have a goal of what you want when you get out, I could see a million token possibly hitting like $1,000 this cycle. So that would give you $41,000. I don't know if that's a lot for you or not. You could, if you have to have a goal. Maybe you only want $30,000 or 35. So if you hit that goal, then just cash out if that's what your goal was. Finally, why do you support Million Token, and why are there so many articles and vids trying to trash it? I don't know if those vids or hoax. I got into it because the fundamentals, if it's a fixed supply, my brain can understand that, and I can understand that it runs on the Ethereum blockchain, and you just use gas fees to make transactions. All the circulation's out in supply, and there's no energy flood like with Bitcoin. That's why I got into it. And I just ignore all the FUD and the people are trashing. Most of the negative comments I see on this YouTube channel are the same FUD excuses I heard in the early days of Bitcoin. Whether it's a pyramid scheme or a Ponzi, it's just they just don't know. They don't know, and I just ignore it. And I just ignore it, and they're not sitting where I am right now. There you go. Huge episode for making all your questions. So there you go. Those are your answers. The best I can do. I'm just one guy with one opinion, and that's the best I could do. Let's take a look at the chart real quick for Million Token. I'm at dextools.io if those people want to know how to chart this. And you can go up here and click indicators and then just pull all this stuff up. So, I think we're still going to go down a little bit because, mainly because of this. I keep going over this chart when the alt seasons are. So, Bitcoin's still making mad gains, trying to stay above $40,000, and then it's probably going to go to 50 real quick. I think I saw another post by William Clemente about the whales still gobbling up all that Bitcoin, and it's going like parabolic. So it wouldn't surprise me if we snap to 50K for Bitcoin pretty soon, and then that's just going to increase the Bitcoin dominance. So this chart would go down for the altcoins. So I'm looking for these levels down here at the bottom. Another drop of 10 or 15% ish maybe. But if I'm wrong and Million Token goes up higher, that's great. But I still think the altcoins are going to bleed for a moment until Bitcoin makes new highs. And with that said, you could just put in horizontal lines where you see candles open and close consistently. And, we can be going down to, I think I posted on Twitter earlier around $60 or something like that, or 58. I think we already touched $60 a few hours ago. And then, we're looking at 55. RSI, I think we could double bottom here at the low. Was that 40-ish? The MACD is like it's rolling over south, down, not good. But the stochastic RSI is kind of curving up. But this is all in the 4 hour, which it's not a lot. I wish it was on a day chart or something, but we just don't have a lot of price action. So I'm still looking for some downward pressure on price for Million Token, unfortunately. So I'm going to stay patient, and if it goes up, I'm happy because I already got a big bag of Million Token. So what else is there to do? I think that covers everything. Oh, you know what? I'm going to throw this up here real quick. S&P 500. Okay, so this is 1950. So we're in this channel here, and it kind of breaks out around the early 80s. I think that's probably when the computers were coming out and things were getting kind of good productivity. So, it kind of goes up, it goes up, it goes up. And then, like, this is almost like a parabolic move, right? But then we have a parabolic move on top of a parabolic move in the 95. Again, probably Windows and computers becoming more advanced. So we had a good growth here on the far left, and then we went, I don't know, 30-degree angle, and then we went on a 45-degree angle. It's crazy, right? And then we had the dot-com bubble crash. Just people taking profits, right? We all know about parabolic moves. And then it went up, and then we had the housing crash. And then in 2008, it kind of continued because we had the monetary money printing policy. So we're going up, and we're going up. And then we had the COVID crash back in March of 2020. But look, we have like another parabolic move on top of a parabolic move, which is like crazy. I don't know. I can't see how this is going to last. It can't sustain itself. You can have all these people like my age in their 50s or whatever that's been putting money in the stock market for years, and you're going to give us like 40% gains year after year if we continue this trend. We're all going to cash out, and no amount of money the federal government can print is going to stop this crash from happening if you just keep going up and up and up and up. So just to try to put this in context here, over here we have the dot-com bubble, housing bubble, and then this giant move here, and then a parabolic move on top of a parabolic move. It's just, this is crazy. So, I think Jerome Powell just had a meeting yesterday about how he's not going to raise interest rates. So this thing is going to just go up and up and up and up, which is good for Bitcoin and any scarce asset like Million Token. My fear is, that eventually this is going to roll over and hopefully come back down to these lower levels, which would be a drop of, if it rolled over today, 20% or more, probably more. But man, when this drop happens, everything's going to crash because Bitcoin's going to crash, and then Bitcoin's going to drag all the other coins down. So it'll be interesting what's going to happen. And then I don't know when the governments are going to have the CBDCs, is it the central digital currencies, which is just going to be basically the same thing as fiat, except they'll be able to track everything. So this is a big concern of mine. I got out of the stock market years ago in 2017, and it kept going up, but that's because I shifted my focus on crypto. So I was okay with that. And if this thing rolls over, and everything goes down, at least I have a good part of my 401k in a stable fund, which won't go down in value. But if the currency is being devalued, right? What's the point of having a big bag of cash? It's going to be tricky. So this thing rolls over, everything's going to go down. But I think the first ones that recover will be gold and Bitcoin, just like it did in COVID. You're going to have a big crash. Like Bitcoin dropped 50% in a day, but it was the first to recover very, very quickly. So the same thing's going to happen if the stock market rolls over, everything's going to go down, and then until it doesn't, and then Bitcoin will be, go up fast. So that's just a concern of mine. So even if you cash out for a year or two and you time the top perfectly, like what are you going to put your money in, right? Cash, I guess. I don't know what else to put it in. If you keep it in crypto and the market keeps dropping another 70 or 80% over the year, you'd be kicking yourself like I did like 3 or 4 years ago. Anyway, that's my rant on the stock market. I just don't understand it anymore when they're just printing so much money, and people are just don't want to go to work anymore because they're getting all this free money on UBI or whatever you want to call it, stimulus checks. It's just people just aren't going to want to work anymore. Anyway, that's my rant. Bye.